following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tosaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block, everybody. My name is Mike Tosaw, and I will be guest hosting today for Mr. Mark Longo. We have an exciting show planned for you today. We do have two other people in our all-star cast today, starting with the Rock Lobster, who's not really the Rock Lobster because he's in Chicago and he's not even Andrew. Allow me to introduce to you Mark Sebastian. Mark, how are you today?
Hey, good to be back on the show. I know it's been a while, but it's always a pleasure to get a chance to come on Option Block. It's a blast.
Always happy to have you here. And beaming in from beautiful downtown Chicago, Illinois, and a beautiful day today, I must say, we have the Viceroy from Options Express himself, Mr. Alex Jacobson. Alex, how are you today?
Yeah, I'm good today. It is beautiful downtown Chicago today. You just want to sort of wait for the market to close and the show to be over so you can dash outside. It's just so nice today. Great event yesterday, the Unusual Activity event, the Insider event at the SIBO.
Oh, yeah, that was a blast.
That was a fabulous afternoon, and it was such a great opportunity to meet a lot of the people that I think we all talk to that are listeners to the show. I met a handful of customers, and it's always fun to be back at the SIBO.
Now, what's the CBO? What's the floor like these days? Every time I go there, it seems like there's always less and less people on the floor. Is it pretty much just the SPX and the VIX pit, and everybody else is pretty much like?
I mean, Alex, what we say was the over/under on total market makers on the floor. Well, you got some guys in the super pit, but in the regular equity pits, I would say maybe a total of 20, 25 guys total. What do you think?
I didn't do a head count, but it's just what you think, Mike. It's two pits, a few people left in the equities. Doesn't mean there aren't people trading. They're just electronic and remote. But it's a big facility. They're doing a lot of construction. My old shop, the Options Institute, is getting new digs on the fourth floor. Excuse me, the floor is quiet, obviously, but that doesn't mean the trading isn't going on.
A lot of guys have just elected to go upstairs. Most of the floor trading stuff, you see brokers just kind of standing around. There isn't a lot of open outcry trading anymore. I think when I left, open outcry was something like 20 to 30% of the volume. Alex, so at SIBO, it's got to be down to below 10%, not counting S&P and VIX.
Yeah, I don't know. It's a small number, but I truthfully don't know.
All right, and then with that, let's dive into the trading block.
The trading block.
And welcome to the Trading Block, everybody. This is the part of our show where we talk about what the heck went on in the market today. So with that, from what I'm seeing today, it looks like we had a pretty solid day till the end, and then I'm seeing some red ink. And so, Alex, what are you guys seeing over at Options Express? What caused a market to actually have a down day? Is that even allowed anymore?
Yeah, shock and awe. We were amazed. A lot of political news came in at the end relating to Syria and what was going on, and it rallied oil a little bit. But, some bad news this morning, which the market lately has been able to overcome. But we weren't really down a lot. Vol didn't pop much, and it sounded like a broken record. Tesla was up today. Apple was up today. There was a client there yesterday of the firm who's also a listener, and he asked me to create a little more data into the OX block. So I'm going to showcase one of our tools today and talk about what our customers were trading today. But much of the volume today was just what you'd expect. Gold, Apple, Netflix, Tesla. That's what was lighting up the tape.
Yeah.
All the fun ones. Seabass, what's the take on the VIX today?
Yeah, it's interesting. We saw the VIX rally. This is the third day in a row the VIX has rallied. It's over 13, which is not a big deal if you consider that 13 is, 0.8% a day of movement, something along those lines. But, I think we're starting to see, a little bit of kind of volatility back in the market. I wouldn't be shocked. I personally feel like we are going to test that 1700 level at some point. But I would not be shocked if we got a little bit of an ease back. Call it 2%, maybe 2.5% down to maybe that 16.20, 16.25 level again before we're able to take off. I just feel like, there's some real volatility starting to be priced in. And how about Tesla? So let me get this straight. They are going to sell 2.7 million shares and the stock goes up. Tesla is Apple 2.0 right now. It's incredible the amount of euphoric momentum buying in that stock that is just running it higher. It's really incredible. Typically my understanding is that the reason why companies elect to sell equity is that they think it's the best way to they go for these secondary equity offerings when it's the most cost-effective way for them to raise capital, which kind of basically implies that they think their stock's too expensive. And I wouldn't disagree with them. So Tesla is just nuts. And then aside from that, NASDAQ was kind of the only the big winner of the day relative to the other major indexes. Because we saw Apple in the green, Google in the red, but Microsoft and Apple, the two top stocks in the NASDAQ, both green today. So, I think the pattern we're seeing is, maybe the S&Ps are going to slow down a little bit, NASDAQ's going to lead, and the Dow absolutely is going to slow down. That's kind of what I'm looking at. I don't know. What do you think?
Well, I think it's interesting in that what's funny, first off, is the fact that when you say that you think we're going to test maybe the 1620 level in the S&P, that actually sounds 1620 sounds bearish. That's how bullish of a market that we've been in lately. But yeah, I think you're absolutely right. Things do have to cool off at some point, typically even back in the late 90s. I think that we even had a down day at least once in the late 90s from what I hear. But yeah, I agree with you on that. And the interesting thing about Tesla, it's cool. And the market believes that. I remember watching that the movie about Mark Zuckerberg on the story of Facebook. And so the main thing that they kept saying about Facebook is that, well, it's cool. And that was like the whole thing about it, of why Facebook became so big, was because it's cool and everyone wanted to invest in it because it was such like this thing like this. And like Apple was cool. It had all these gadgets, and you could argue and make a case that maybe the Droid did the same thing or whatever the case may be, but Apple was cool. And even on the years that you guys harangued me for being long the stock so much, my comeback was always, well, it's Apple. And it did well because it was Apple. And I think that the analogy of Tesla being Apple 2.0 kind of makes you think. An electric car company, a high-end electric car company, you're attracting people with money, and you're attracting something that society a lot of times thinks is cool because either one, they're environmentalists and they want to protect the environment because gas is evil, and I don't want to go down that road, but that's one person that attracts to it. Number two, who doesn't hate paying for gas? And number three, well, once again, it's just cool. So it's an interesting stock to say the least.
I mean, I love all the, we're getting things are getting overboard when you're seeing, the kind of ridiculous commentary like, is the Model S the best car ever? Just ridiculous things like that. And, it just hyperbole and euphoria abound in this name, and that's something to be readily aware of.
My nephew has one. He's a VC out in the Seattle area, and we're a family of performance drivers. I have a couple BMW M's. I have an M5 and I have a Z4 M, and I haven't driven the S yet, but my nephew, who isn't a pushover, says it is far and away the most fabulous thing he's ever driven. And the benchmark that he uses is the BMW M3. And M3 is, I don't want to turn this into a car show. M3 is probably the best fossil fuel powered performance coupe. Wins accolades every year.
Yeah, I would say between the M3 and the CTS-V, those are the two by far the two best of those.
Yeah, and he says the Tesla blows it away. Blows it away.
Wow.
So, and I just had one of our attorneys come over who's an Audi fan and just put a Post-it in my face and said, no, it's the S4. So I've already created controversy here. But, I mean, he's a VC. He's clearly environmentally conscious. But his reaction to it is it's amazing. It's just the finest thing he's ever owned. And, I read everything that you read, Mark, where Consumers Reports said it is, in fact, the finest car they've tested, but they wouldn't endorse it because they don't have a service history going on a couple years. And he's a smart guy. Right now, he's hitting on all cylinders. And, your point, he's selling debt. He's retiring debt. He's retiring the government debt with cheap equity at what's an attractive price. And, a little bit in the Xpress Block. I'll talk about what our customers were doing in it today. But, it's interesting to watch it evolve. I do think, however, these big moves that we're seeing in the Teslas and the Netflix is really an indication of how thin markets are and how there isn't much of a real market maker community left. And I think some of these moves are exaggerated because of that.
Yeah, well, Alex, here's a question for you. If when the stock goes from 45 up to 90, should the implied volatility go from 45 also up to 90?
In a thin market, sure, because it's the same thing. It's the same thing the VIX is doing. It's not going down because markets are thin. You would have expected on this rally VIX to be in the 10, 11 area. And I'm somewhat of a contrarian. I view volatility as the cost of hedging. And so there comes a point where if you're trading in $6, $7, $8 increments, even if you're going up, your cost of hedging hasn't gone down.
Right.
So I think there's more color in it. One of the great things about yesterday's event is how everybody talked about you can't just look at the raw numbers and you've got to dig a little deeper.
Yeah.
We're in a market where I think liquidity is still poor. And that's why this stuff moves 7, 8, 10, stuff moves $15 a day, which has been great for the options market. I mean, look at the day they decided to sell gold. Right? Mm-hmm. They took $100 out of it. I think that tells you a lot about liquidity or the lack of liquidity. And I think, clients who trade need to be aware of that.
Yep, I agree.
Absolutely. All right. And that will conclude our trading block for today. And now let's dive right into the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Xpress Block. This is when we sit back and we hear the wise words of the Viceroy. Mr. Alex, what do we have for us today on the Xpress Block?
So I thought I would take a couple minutes and talk about a request I got yesterday at the Unusual Activity Forum. Gentleman stopped me who's obviously both a listener and a client of Options Express, and he was telling me that one of the things he finds most useful is a tool that we updated a couple months ago called Trading Patterns. And I'm going to apologize because I'm fighting a little bit of a cold here, so you may hear me sipping some iced tea or hopefully not hacking. But what Trading Patterns does is it lets you look at a couple things. Number one, it lets you look at what underlines people traded if they traded a given name. Now, that sounds a little confusing, but what you can toss into it is, let's say you're an Apple trader, or let's say you're trading COMEX Gold, right? You can put the symbol in, and you can see what other people who traded that are trading in the OX trading environment. And this fella at the presentation yesterday said he finds it real interesting because it gives him a sense of like-minded people. So he said, if you could take 30 or 40 seconds in the show, and of course, as always, I've already taken 4 minutes being long-winded, but if you could take 30 or 40 seconds and talk about what was most active in the OX environment, I think people would find it both useful and interesting. So I went on the Trading Patterns tool. And by the way, this tool is available to everybody who is a virtual customer or a real customer. I think it's also available to the Schwab customers, but I didn't check that. So let's put a little question mark after that. But in gold today, the most active instruments trading here at OX were the expires tomorrow 133 put option. So a little bearish sentiment in gold. The interesting thing about all the most actives were expiring tomorrow. So it kind of tells you the transactional nature of what goes on during an expiration week. In the Apple, the most active instrument was the May 440 call. So people are looking for a pop tomorrow. Netflix, the 245 call, expiring tomorrow. And some of you were scratching your head and saying, are there really lots of people who trade this stuff that expires in one day? The answer is yes. Yeah, especially with the movements we've had and the volatility we've had. You know, as we talked about a couple minutes ago, some of this stuff, one piece of good news, and it's up $16 or $17. Tesla, the expires tomorrow 100 call, followed by the 95 call. And one comment about kind of showcasing this one-day stuff, you have a sense now of the life of terror that a market maker leads going into expiration, where they come in on Friday morning in a stock like Tesla or Netflix, and they've got a ton of open interest in an out-of-the-money call, which is a zero delta. So it hasn't been hedged to a large degree, or they've been burned in the past and it has been hedged. And they come in, they go home at night, they're in some state of balance or hedge, and the stock opens $11 higher. And now, 20 or 30,000 calls that they had on their sheet as 0 delta are now going to be 100 delta calls. So, the old adage that market making is picking up quarters in front of a bulldozer is exactly what's going on. But so that's what was lighting up the tape here today. And it's a lot of one-day stuff. So if you are someone who's an aggressive trader, the regular expiration week are what we up here call the synthetic weeklies, because they're in a sense the kind of regular weekly. But given what's going on in the market, I think it's a pretty cool statistic.
Okay, well, now I got a question on that, Alex. For the 1 day, the 133 puts that you were mentioning, is there a way with which to determine whether it's people selling to open or buying to open through this tool, or is it just shows the activity itself?
The tool is simply gross activity, and that's one of the points we made yesterday. That to your point, Mike, were they selling or buying? Generally, people who are trading in the 1 day stuff are buying. Generally,
interesting.
They're buying. It doesn't imply that nobody sells. The tool itself is just the gross number. If you're selling 1 day stuff in this kind of environment, you need to have lots of capital. You need to be able to sleep nights, and you need to be very brave.
Yeah, I'm not a 1 day seller by any means, unless I'm spread to high heaven. But yeah.
I mean, there are people who love this stuff in this market, and you can come into some of these and buy them the Thursday of expiration week or the Wednesday of expiration week, and again in these names every week is expiration, and you buy some stuff that we as kind of option professionals might view as not the ideal use of your money, buying the Tesla hundreds, but we've been proven wrong for the last 2 weeks. Buyers have been cleaning up in the last couple of weeks.
Yeah, and I guess I'm looking at the 133s right now for 50 cents. There's easily enough juice there to where you can get some movement if you just have a down day today.
Yeah,
or tomorrow, I should say. Yeah,
and there are some people who are aggressive traders. Let's call them speculators, who say, look, for $500, I could have bought 10 of those, and if I come in and gold's down $8 or $9 or $10, it's a home run. And if not, $500, manage the risk.
Yeah, and that's the thing that a lot of people don't take into effect with options. They view buying options as such this speculative thing, but in reality, you can argue and make a case, yes, the odds are more in favor of you winning if you're selling those 133s, but the amount you're going to lose if you're wrong is a whole lot greater if you're wrong on that trade. That's
This is the classic debate in options too, is who makes out in the long run, the buyers and the sellers, and it's an ongoing debate, and we could spend the entire show on it. But the reality is, if you looked at many repetitions, which of course nobody does, if you looked at many repetitions, sellers would win much of the time, buyers would win occasionally, but on those events where buyers win, they win big, and sellers feel a lot of pain. And statistically, if you believe, I'm going to sound like the dorky academic now, if you believe Black-Scholes and Cox-Ross, if you did this 1 million times, buyers and sellers would net out. They would do about the same. But buyers could easily run out of money before they get a streak like we've had here in the last couple of weeks. And that means in environments like this, if you are a buyer, hopefully you make some real money.
Yeah, you gotta hit the home runs when you get a chance to. That's for sure.
Yeah, and if you are a buyer, this is one thing you and I have talked about, and I know we've talked about it on the show. You should still have kind of a day-to-day or week-to-week kind of income strategy to try to premium harvest, to try to take some money out in the environments when the market's in a trading range.
Yeah, you have to, just because if you try to do always one thing only, then yeah, you're absolutely right. Because once we actually get to the range-bound markets, or at least the range-bound market for the instrument with which you're trading, the theta monster is not nice to people at times.
Yeah, ice melts, the clock ticks. You know, you get that question periodically, and someone will say, "Well, is your time erosion on the weekend?" And you say, "Yes, yeah, absolutely. Ice does not stop melting because it's Saturday."
That's a good analogy. I'm going to have to use that one someday, Alex. I could write a whole chapter on a book of analogies that I've taken from you through the years. But I always give credit where credit's due. So people, about 30% of everything that I say, it came from Alex and listening to him. But anyway, well, that'll conclude our Express block for today. And now let's dive into the strategy block.
The strategy block.
And welcome to the strategy block. This is where I'm going to introduce myself. It is me today doing the strategy block as per usual. And what I want to talk about today, this is going to be more of a this is what I'm seeing in the market type of a block. We've seen big rallies in the market before, folks. We've had them in the late 90s. We had a rally in the going into 2007. We've had rallies before. And typically when we have a rally, the main thing that I want to really stress here in terms of what typically happens is that nothing's typical. You never know what's going to actually happen with it. But what I do want to emphasize is the way with which I'm preparing clients and what I'm doing to take on this rally. So with that, I know I've said this a million times, but I just want to reemphasize my point to any new listeners. My sentiment on the market, my take on the stock market is that I am long-term bullish but short-term cautious, meaning that if you go to any financial planner in the world, you'll hear something typically about how the market typically goes up 9, 11% throughout time. That's what it's averaged since the 1930s, yada, yada, yada. I agree with them. Those statistics don't lie. That's something that's there. We have a very strong stock market over the long term. However, where I differ from most financial planners is that I believe that I couldn't stomach a client calling me saying, you know what, my portfolio just went down 40%. I could have bought 3 houses with that. I don't ever want to have to take that phone call. Now, granted, I do take phone calls very frequently, like the market's going up. How come we're lagging the market a little bit? I'll take that. But then on days when the market goes down a lot, we're ready for it. So what am I doing right now for clients for, number one, if this train keeps a rolling, if the Dow goes up to 16, 17,000, and number two, what if the market does have a pullback? What if this is going to end ugly like it did in 2000, like it did in 2008 after those, our most recent market highs? Well, once again, I'm a premium buyer right now. I'm of the school of thought in that what's better, to be a premium buyer or a premium seller? Well, I don't know. I've been debating that within my own head for at least 10 years now. But I think what you need to do is do what's right for the individual situation. I've had a strategy where I've been selling puts on the S&P for a couple of years now, and I just put the kibosh on it a couple days ago. I've been in cash for a little while on it. And yeah, we missed a little bit of upside market of it. But what I've did with that strategy is I reallocated that to a long put or to a collar strategy that we're doing on the marketplace as well. And right now in that collar strategy, we're just long puts. And the reason for that is that I believe that with a VIX at the 13 level, we're not low. We're not in the single digits like we were back in 07, but we're definitely lower than 20, and we're definitely lower than 30. And with that, we have a raging bull market now. So is it going to continue or is it going to go down? Good gosh, I don't know. But I do think that there is going to come a time when we pull back, and we'll be ready for it. Now, on the upside, let's say that the Dow does continue to 16,000, 17,000, 18,000, whatever the case may be. Let's say it continues to go higher. Folks, we're going to be a part of it over here at RCM with the clients that I manage. Are we going to capture 100% of that rally? No, But as we're going up, what I plan on doing is rolling those puts up to protect our profits on the way up. I feel that volatility is at a low enough level to justify doing that right now. And let's say that the market actually does go down. In 2000, it went down ugly. In 2008, it went down to levels in which you wished 2000 would come back. So should that happen, we're ready for it with the protective puts or long calls in some cases to where we have more money on the sidelines than we're just coming in with long calls. But we have a plan in case it actually goes down. We're going to miss some of the upside rally, no question about it. But at some point, I really believe that we're going to have a pullback. When is it going to happen and how long is it going to be? I don't know. But when it does happen, and I believe we will have some type of a pullback at some time, we're ready for it. And whether you're using options, whether you're using stop losses, or maybe you're hedging things with futures, who knows? I think it's important to have some type of a plan in place in case the market goes down. Recently, I had heard a financial planner tell another client of mine, well, who was a client of his, who's now a client of mine, actually. They were saying, well, what's your plan if the market goes down? And the financial planner said, well, that's market timing. And I'm not able to do market timing. No one can. And there's some truth to that. I can see where they're coming from on that. Some people can. Some people have made a lot of money doing various types of market timing. But the difference there's a big difference between market timing and managing risk. I feel very comfortable with the fact that there was a strategy with which I had, and still do, of just being long calls on SPY. It's my simulated index strategy. And just the oversimplified example of it, for the money with which you want to have long-term exposure to the stock market, let's say you had 100 grand you wanted to have in the stock market. Instead of putting all 100 grand in the stock market, we take 80 to 90% of that money, 80 to 90 grand, put it in something boring, a tight collar on something, perhaps a cash value life insurance policy, just something that we deem as safe. Each client's different in terms of what safe is. And then with the 10 to 20 grand, we'll just buy calls on the S&P, and typically we're able to do that within an IRA or a Roth IRA. And what we've been able to do with this rally, I've just been continually rolling up call options as the market went up. And because of that, we have a pretty significant amount of money in cash to where if the S&P goes to 1,300 tomorrow, it's really, yes, it's going to have the account value go down, but a lot of that money has gone into cash for the time being, and we're looking to invest that money we've taken off the table into something boring again. So that's my 2 cents for the day. That's what we're doing right now in terms of long-term markets, and that is one to grow on. And next, let's do Around the Block.
Around the Block.
And welcome to Around the Block. Around the Block is when we take a look and see what we are looking at our various places of business. So Alex, over at Options Express, what are you guys looking at in the coming days, weeks, months on the economic front or on the earnings front or on any front for that matter?
So 3 earnings, DELL, JCP, and Hewlett Packard coming up, and obviously there's been a lot of press about them. So we're looking at those, and one of the things we watch closely here is the 10-year, which has popped back up, both from a standpoint of what it means on a macro sense and just kind of as a general measure. As we talked about earlier, volatility, the VIX itself, and the term structure doesn't really seem to be signaling a whole lot. It's clear that it's not going down, but that's what's, that's the stuff we're keeping an eye on here.
Very good, very good. And just what we're looking at over at RCM, definitely interest rates. It's one where they're finally starting to not continually drop like a rock every day, it seems. So we are getting a little bit more stability along those markets. And then in general, the other thing that I'm looking at is Apple. I I read somewhere where 390 was a key support level for Apple. It's popped back a little bit, but it's getting a little bit choppy again around the 430 level. So definitely looking to see what happens with that. And then the other thing that I'm looking at is gold. We could be forming a double bottom in some way, shape, or form at the levels with which gold is at right now from about a month ago when we had that Sunday night scare, if you want to call it that. And just the market in general, it's continuing to go up, except today it kind of went down a little bit. And it's something where it feels like just a grim day when the Dow goes down 40 points. It's an interesting market, to say the least. And Mr. Sebastian, what do we have going on at the option pit coming up in the next week or two?
Oh, we got all kinds of fun stuff going on at the option pit. I'm doing a webinar for Trader Planet on the 30th. I've got the Street Monster Investment Conference in June. I'm doing a webinar with Stephanie Link. The big thing we're running is a giveaway where if you use code PIT1, you can buy my book and get 1 month of Option Pit Live for just $35. Go to optionpit.com/mentoring, sign up for Option Pit Live and use code PIT1, $35 for my book and a month of Option Pit Live. So that's about the best deal since us giving away the book yesterday.
There you go. There you go. All right. And over at Options Express, what events do you guys have coming up, Alex?
So the education team, I'm looking at Mr. Cusack, who leads our education team, and he's standing here with his bag about to go to the airport. They're going to be in Charlotte this weekend for an all-day in Charlotte. And if you're not one who wants to get up at 8:30 in the morning on a Saturday and you want to participate in the event and you want to do it from home with your paper, the dog, and a cup of hot chocolate, we simulcast those on the site. Just come to the site, optionsexpress.com. You don't need a login. You don't need to be a customer. Although I greatly appreciate it if you got a login and became a customer. But you can simulcast all our events. All our education events are ahead of the login. Next week, Tuesday, mini options at noon. And Tuesday night, we're doing another evening idea hub, doing that at 7 o'clock Chicago. I will be home with my dog and my hot chocolate, doing a 1 hour hub. And that's what's in the pattern for the next few days.
Sounds good. Sounds good. Now, my question is, on a day like today, how can you be craving hot chocolate? I think it's more of like maybe a chocolate milk is kind of what's coming to my mind right now.
Are you a chocolate milk drinker?
I love chocolate milk.
I love chocolate milk too, and it's one of those kind of closet loves that everybody loves it, but no one readily admits it until you go out to a breakfast restaurant. You find half the table orders chocolate milk.
That's true. That's true. No one does like to admit it's like one of those guilty pleasures. It's supposedly a kid drink, but you give me a chocolate milk and a slice of pepperoni pizza, I'm a happy man.
That's it. Sounds like a plan to me.
All right. And folks, thank you for tuning in today to this episode of The Option Block. Be sure to join us next week when we get the full cast of characters back in. We will get Mark Longo back in. He's going to tell us. He'll tell us something, I'm sure. It'll always be good whenever we have the head man back in charge. So thank you for coming, and let's have a great trading day tomorrow, everyone. So long.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.